Guys, while I'm at it, this is Due Diligence here, and today we're just gonna spend about 8 minutes to talk about inflation. And this is one of those very highly requested topics that everybody on Patreon want to know about. So I'm just gonna talk a little bit about it. And again, headlines are being really dramatic. It's saying U.S. inflation data is like a punch in the stomach for the Fed, saying by the economists, and they're saying, oh my God, inflation is going so badly. But in reality, if you go watch my previous videos on inflation, I talk about the end mark by about July this year. We predicted that the CPI is probably going to surge to about 8.3% year over year. And we're on track of hitting that mark. This is why March inflation, the March interest rate hike is inevitable, and this is why even though we are enjoying a short period of time where people are keep FOMOing stuff and buying up, you can totally see it on the Nasdaq. You will see that the Nasdaq refused to go down, or if you look at the implied volatility of Nasdaq and realized volatility in Nasdaq, you'll realize that a lot of times a lot of people buying back over that, and we see a gap down and moving up again, a gap down and moving up again, going down, because the 13,000 line is really a key resistance line, is more like a key safety line per se in this case, because a lot of people actually don't believe that Nasdaqs are overvalued. So in terms of just what this inflation data really tells us, it's nothing to be really worried about, because as we indicated before, direct inflation data actually have nothing to do with long-term or even short-term stock returns. It just introduces more and more volatility into the market. Introducing more and more volatility into the market literally just means the stability of your portfolio goes down, and depending on whether there's going to be a black swan event, or depending on when the Fed is going to make a move on actual interest rate hike, or whether they're going to speed up the process of trimming down their asset portfolio in their Federal Reserve balance sheet, it might sort of have a temporary huge correction effect on the bigger market. But in a long run or in a medium term, it doesn't really do anything, and the behavior of the market towards inflation is actually really random. The only reason that the market behaves really badly to inflation data is not because they actually worry about inflation data. Everybody knows that inflation is not transitory and inflation is going up as we speak. It's because they are transitioning. I mean, as I talked a lot of asset balancing and a lot of portfolio balancing over the past few weeks in my Patreon section, a lot of people are asking me questions about a lot of those insider buying volumes and all this kind of stuff. The reason why a lot of insiders are buying at a near bottom cycle where we are here is because they're rebalancing their own portfolio by leveraging some of their options that they can exercise to sort of balancing out the stocks that might expose to a very huge downturn effect when interest rate hike happens. Okay, and a lot of players in the market, what they do when inflation data come in this year, especially for last week, what they did is they trimmed down a lot of their high risk investment and put more money in oil, because we all know that Fed cannot really increase interest rate that fast, especially before they're done with easing the effect of quantitative easing, which we now call it tapering, right? So their hands are tied in this cycle of things. Okay, they cannot really increase interest rate unless tapering is done. So in this emergency meeting tomorrow, they're gonna talk about how their plans to increase the interest rate in March. Therefore, we will see market go through a huge volatile cycle, especially towards the downside, leading towards March 1st. And if they actually decided to come out in March 1st and say, hey, we're interested in interest rate right now, on that day, the market is going to be horrendous. Okay, most likely scenario is they're going to come out March 22nd and say, hey, guys, we're increasing the interest rate by 0.25%, which is 25 basis point. Because if they actually do it at 50 basis point, it might have a bigger shock on the market, even though a lot of those prices are already baked into a lot of those stocks when the Nasdaq is at 13,000. This is why, if interest rate hike is happening in March, Nasdaq going under 13,000 is actually inevitable. The only question is how fast is it going to go down over that line, and how will it go down to that line in a fashion, right? It's either going to be a multiple volatile battle between the long side and the short side eventually landed under 13,000, or it's going to be a consecutive up days and consecutive down days because people are panicking, or it's going to be a sort of like a crashing situation where it behaves like a black swan event where it suddenly increased 50 basis point and Nasdaq go down by about 12%. But if the 12% case happens, then it probably will be a good long-term buying point anyways. So in here, what we really need to decide is, what do you guys think that, we know that the market is going down, right? But we have to sort of have a time frame of when it's going to happen and how it's going to happen. And then based on the time frame, you have to make your own investment thesis. This is also one of those reasons I'm going to post a video later on this week talking about how I blow up one of my accounts trading options, because I know things are going to happen, but I think things will happen sooner. But due to the fact that the Fed actually has a very, very slow business cycle. We call this business cycle, but in reality it's discussion or policy making cycle. Therefore, nothing will happen in a weekly basis. If you want to bet on whatever Fed is going to do or is doing, you have to bet on a monthly basis. But that's going to be another video. But again, we're not financial advisors. We do not give financial advices. Everything we say on this channel is for shits and giggles. So the main takeaway from this video is there's nothing to really worry about in inflation. We all know that it's happening. It's expected. Price already baked in. The only thing is a lot of people are speculating that there's going to be a huge oil price hike. And if you want to tune in and sort of catch up on that trend of the investment, you can join our Discord or join my Patreon. We talk a lot about oil. And again, we've been longing oil ever since March 2020. So again, this is one of our main portfolio thesis where we believe that oil prices are actually really undervalued because divesting and a lot of EV transition. We don't think it's gonna be as successful as everybody are proposing or promoting, and we think that a lot of times consumption is actually underrated over your lab-based expectation of how transition to the EV world will go. But anyways, this is it for this video. Hopefully you guys love this video, and see you guys on the upside. And if you like this video, smash the like button. It will help us a lot. If you don't like this video, just click it off or leave a hateful comment. We love to read hateful comments because eventually we all prove you wrong. See you guys on the upside.